Hello, ladies and gentlemen. It's a good day to be. It's a good day today. Today is Sunday. It's a beautiful day. Praise the Lord. Sunshine here in Edinburgh. It's 5:15 p.m. and it's 3rd of June 2018. Now I'm bringing to you the market analysis, where I'm going to look at the key market movers for the coming week, and we're going to conduct a technical analysis, looking at the key major levels and discuss on trading opportunities that can be seen and can be taken and can be avoided. And remember, guys, we all use our risk management strategy. That's a key one, followed by other execution strategies. All can be found in my book. You can just click down below and it takes you direct to the Amazon link, where you can get the paperback version, or you can have the Kindle book version, which is a soft copy. For those guys who have iPads or larger phones, you can have a soft copy and have a read. So I will advise you guys go and have a look at it, because I try to combine the strategies used by the best traders out there. Because trading is not about how much profit you make, it's about consistency and being in the game for a long time. On average, normal retail trader stays in markets in trading the markets for roughly maximum 3 months, and they're out of the game. And this is because of the risk management they do. It doesn't matter how many money you make, it's about how much you keep and preserve the capital. Without further ado, I just want to jump on. Okay, yes, guys, I want to remind you that I'm going to start providing education on a premium fee. So I'm gonna, if you have any interest in trading the markets, just send me an email. Or if you have my phone number, you can just text me and we're gonna have a chat on WhatsApp. Now, if you enroll with me, you're gonna get signals as well. Why I look, but not all signals I trade. Some signals I label them as green and others as red, which means that red they're quite substantial risk trading them, and green means the risk chances are really low, and those are kind of trades I normally take. So guys, it's all up to you. Let's crack on. To kick off, I'll start with key events. Number one is by the way, someone asked me last time what's the percentage return per month and even per year a regular trader has, especially currency trader. Listen, guys, most of all these kind of bookies, small boutique kind of education trading traders, guys, they don't really have a good answer about this. Well, to be fair to you guys, is a 2% per month with a low volatility environment. So you're not removing the kind of market situation at the moment with Donald Trump. There's a lot of volatility out there. On a normal given day, just let's say example that Obama time, where there's a very low volatility, we're looking at 2% per month return, which is really good, because if you look at the compounding effect to a year, is so big, and that's what makes Warren Buffett one of the richest man in the world, because of his ability to compound his return year by year. Now, most of you guys, you want to make a quick buck, I understand that, but remember, guys, this game is not a quick buck. Is very hard, and you need to learn and understand the economics fundamentals, finance fundamentals. So it's not for everyone, to be honest. All right. So the key market movers for this coming week, you have RBA rate decision. This would give this is a very interesting stuff, because could be the heaven sent answer for the Aussie, because Aussie dollar has been struggling for a very long time now. If the RBA rate decision is the interest rate is low, you expect a depreciation in the value of the Aussie dollar. But what I see now, because probably the Australian government already reached their consensus levels of economic growth, probably gonna increase the interest rate just to calm things down, and we're gonna expect an increase in Australian dollar. But as far as I do, let's see what happens. So last week, guys, if you traded 9-month payroll, big up for you guys. There was last week, you know what happened? The 9-month payroll was positive, the unemployment level was positive, and wage growth was positive, and this has not happened since 2000, and that gives you an hindsight of Donald Trump mission making America great again. It's bringing employment back, it's raising the wages up, which is very positive thing for the US in particular. But it kind of hurts other side of the equation, the China and the other Pacific Atlantic countries, plus the euro as well, because that's what we're gonna cover next. The few later I'm gonna cover about that the trade war between Europe and the US. So the dollar has started to reach the key resistance level. This was critically boosted by the non-farm payroll last week. Now we're in a great resistance level. If you can have a look here. Oh crap. Okay, this is key resistance level. You can see there's already a pullback, and now what I'm expecting for the coming week, we're gonna expect like the candlesticks here to be trading on this range. Based on the momentum, it's gonna break out, keep on going up, but this is not what Donald Trump wants. Donald Trump wants low depreciation dollar value to boost trade. So I'm expecting a downward trend here based on economic fundamentals, but based on technical levels, we expect a further upward move. Secondly, I was saying about the trade war escalates between Europe and US, which could be a downfall for the US, but that's what Donald Trump wants. Donald Trump wants a cheaper dollar, wants to boost trade, so it's a win for Donald Trump. Thirdly is Canadian dollar. Canada is trying to renegotiate the NAFTA agreement, which could could save or hurt the trade relationship between transatlantic and Pacific, and especially between Canada and US and the US. Yeah, because since Donald Trump came in, he said the contracts were bullshit, and he wants to renegotiate those contracts, and so now the US has the upper hand on the contract and on the negotiation, and Canada wants to renegotiate back. This can have a major profound impact on Canadian dollar. Fifthly is there is a massive political drift in Europe right now, and it's something you guys need to be careful of, especially when you trade the euro, because I still look the euro in a negative way. Number one is because of just since the past month the euro has been dropping really fast down, and it's because of all the technical reasons. But now there's a key catalyst for it to drop even further down, and those are two catalysts, which are political drift, which is Italian issue, and the Spain issue. I hope you guys know about Italian already. I'm gonna talk about Spain at the moment. What happened in Spain is the lawmakers have voted to oust the long-term serving Prime Minister Manuel. I think it's Manuel Rahal. I can't remember his last name properly. So they want to drop him out. So for the past month, we have seen more instability, which has led to IBEX. IBEX is like an S&P 500 for Spain. So it's an index which comprises all the top 50 companies in Spain. I can't remember very well, which has dropped to 2-month low. So the way I see, if you want to make profit on this one, this is a clear one. It's a clear short, guys. you're gonna go short on this index. So open your broker's account, look for IBEX and short it. Just look anywhere to enter, just don't short it. Just look for where you can make an entry so you can minimize your risk and you can maximize your profit. Remember guys, the risk ratio is 2, the risk reward ratio is 1:2. That's the minimum you can go to. So it's 150 to 50 percent. So you lose 50, but you're gonna, if it goes well, you win 150. So that's the best way to manage your risk and to manage your capital. So lastly is possibility of pound interest hike for a few weeks. That could probably lead to an increase in pound against its pairs. Now, for the few months back, the GBP has been in a very, how can I call it, very cheap because of the economic policies the governor of the UK is trying to employ. So this has led, with this new probability of increase in rate, we're gonna expect an increase in pound against its pairs. So if you're gonna trade GBPUSD, you're gonna short that. What else? GBP against euro, that's a clear one because of these have inverse. This pair GBP and the USD, they've been inversely impacted in terms of so they don't move simultaneously. So the GBP is stronger while the euro is weaker. So the best way to trade this is just you have to buy the GBP dollar for the coming week. No, for the coming month. Sorry. So without further ado, guys, let's crack on to the technical part. I'll try to save your time, guys. I know I don't want to make my videos too long and too boring for you. I want to make this video worth your time. Okay, let's crack on. Oh, sorry guys, sorry for my child. Yeah. Okay, starting with my daily time frame. I just want to look at where the market stands, the trend, and where my buy is gonna best in. Now, starting with the GBPJPY, as I said, there's a possibility of rate hike. Number one. Number two, it has reached this critical area. If you remember, my style of trading, guys, is 1, 2, 3, 4, 5, 6, almost 5 to 6 bottoms here, and it's a good buy for me, I guess, for the coming week. The GBPJPY. So I'm looking forward to trade this. I'm looking forward for the coming. Let me zoom in for you guys. For the coming candlestick here. If it's green, I'm gonna buy this. I'm not going to buy it, but my bias for the coming week is gonna be a buy. Moving on to GBPUSD, guys. Let's look. Come on, open. Yes. Well. I love this trade. As I said earlier, with the key market movers plus the technical side of it, this market is a pure buy for me. It has reached this support level. We're expecting not a correction, a consolidation on this market. So I'm gonna buy this market for the coming week. Let's move it to the gold. All right. The gold dropped last week due to non-farm payroll news, and plus I even gave a prediction on this particular commodity that is gonna go down here to this key level, because it's gonna come here to this major, not like a mini resistance line, and it's gonna drop back to this main key level. Now, what do you expect for the coming weeks or coming month? We're expecting a reversal going up to this key level here around 1012. This significant level. All right, let's jump to US oil. How many left? USOIL and USDCAD. Now another trade that I really look forward to, this USDCAD. Why? Is because this USDCAD there's a massive confluence in this trade. That is this key significant line. There's an upward trend supported by this key significant line. It has the price has reached this key significant line, and there's another significant line over here, which was the double top for these two anchor points here. So what do I expect? My buy is gonna be a buy for the coming 2 weeks, 3 weeks, but with this kind of momentum, I will have to wait. I'll have to wait until I see my signal to enter the market. But now I'll just chill out and just look and see what happens. But this is one of the key USOIL. This is one of the key commodities I'm gonna trade in the few coming days. Lastly is USDCAD. USDCAD also has reached a key significant level, which is here, and this significant level because the price has reversed from this level almost than 3 times. So we call this a triple top. 1, 2, 3. Now it has reached here. It has already given us that kind of confluence where there's a massive red candlestick here dropping here. The moving average is starting to level off, and you can see, if you look at this candlestick here, when the price was the volume was coming in, we call it the shooting star. That you can see there's a massive wicks here, very long wicks. The opening and the closing, there's a massive gap, and the volumes here that have retracted near to the close. So it kind of gives me confidence of selling this, of shorting this market, shorting this currency in the coming week. And remember guys, also the economics fundamentals allow us to do that, so it's not like a guessing work. It's something that needs a bit of both the fundamentals, which are the economics, and the technical skills to be able to come up with a trading strategy plus a trading execution. So guys, that's it. Thank you so much for your time. Thank you so much for your attention. Please remember to subscribe, like us, and share. And if you like trading the markets, just comment down below. You can email me, or if you have my phone number, you can just text me. I'll be there to respond to you. I'd love to see you guys trading and be successful in this game. It's possible, guys. And this is a new way of, they call it the passive income. If you're a millennial and you're out there, you don't know what to do, this is something you could look at it and say, alright, I want to make it, and it's there for everyone. So yeah, I do appreciate you guys so much. Thank you so much, and peace.